Hey guys, hope you and the families are doing well. This short YouTube video is going to teach you how to use my favorite market indicator to identify overbought and oversold market conditions. Now, I also find this indicator to be very helpful from a trade management perspective for individual stocks that I'm either long or short. So we'll talk about that as the video develops. So this indicator is going to be very useful for you, I think, to overlay when you are analyzing the market for whether you think there is a potential top developing in the market, or as we're potentially seeing now, a bottom is developing in the market. So this indicator, there's two, is going to be the percentage of stocks above their 20-day moving average and the percentage of stocks above their 50-day moving average. Now we're going to apply this on the NASDAQ 100, but it is also applicable on the S&P 500 and the NASDAQ comp. We'll take a look at those towards the end of the video. Market Surge are today's video sponsor. They're my go-to resource for analyzing company fundamentals. If you're interested in a discounted trial, you'll find a link to that in the description and the comment section below. So let's go gadget on this. So this layout that you see here, I will share a link to this in the comment section below. So if you use TradingView, you can click on the link. You will then be able to copy this layout. You may have to add a couple of these colorings. I use the rectangle tool for that, and also the horizontal ray to put in these figures. So let me just outline for you, what are you currently looking at? So we have three panels. Okay, we have the NDX on the top, which is the NASDAQ 100 index. On the middle one, we have the NDTW, which is the NASDAQ 100 percentage of stocks above their 20-day moving average. On the bottom, we have the NASDAQ 100 stocks above their 50-day moving average, but this is going to be in percentages. Okay, so you see this 75 and this 25 here for NDTW, and 75 and 25 for NDFI. That's percentages. Okay, so it's obviously 0% to 100%. So what does it mean? Well, what it means here is overbought territory is when you have greater than 75% of stocks in the NASDAQ 100 above their 20-day moving average, and it will be the same here for the NASDAQ 100 percentage of stocks above their 50-day moving average. If over 75% of those, so 75 out of the 100 stocks, are above their 50-day moving average, then we'd be getting these overbought readings. Okay, so we want to be aware about that when we start getting to overbought territory. Okay, we want to be aware. Okay, can you see here, overbought territory there, overbought territory here, top in the market then develop. Certainly if there's been this nice long uptrend and then you start to see overbought reading, we want to think about it as a tide. Okay, we're going to talk about the tidal nature of how to use these indicators. On the other side of that, okay, when we start getting oversold readings, okay, so oversold here like we saw in the springtime, so April of 2024, one of my favorite months of the year. What this means down here in the April time, okay, is less than 25% of stocks in the NASDAQ 100, okay, so basically less than 25 of the NASDAQ 100 stocks were above their 50-day moving average. So that market tide had flowed out. That means we're in oversold territory. So I use this as an overlay for the indexes, okay, because up here you may think, well, this is absolutely, look at this is absolutely fantastic. Look at this trend of the indexes. It's going to go to the moon. It's going up another 30% the NASDAQ. Well, you're missing the point here, okay? If you don't have this overlaid, okay, you're missing the context here about thinking about the market tide, okay? The market tide has flowed in. Okay, so I use this tide to think tide in, tide out, tide in, tide out. So what happens is the market tide down here, when we're oversold, okay, at this point here, the market tide here is out. So when the tide flows out, where's the tide next going to flow? The tide flows out, the tide flows back in. So when you start getting near or in these overbought territory, so greater than 75% of stocks are above their 20-day or above their 50-day, okay? The more readings you get in overbought territory for 20-day and 50-day or oversold territory, the greater weight I would give that. So if we see 20-day and 50-day moving average breadth readings in overbought territory, I would give that more weight than if we just saw 20-day readings in overbought territory. Similar thinking with if we see overbought readings coming through, oversold readings coming through on a 20-day and a 50-day basis. So we want to think about this tide, okay? Then what happens here to August 5th, okay? The market tide flows out, and we see that from a 20-day breadth perspective. We see that from a 50-day perspective as well. So the 50-day gets very close. The 20-day moves in to this oversold territory right there on the low. Look at that. I call that a gap down reversal bar, and this red line here is the 200-day simple period moving average. You see that? But then it's also the context of market tide up here. Market tide was in overbought territory. You see that? Overbought territory. Market tide flows out. Oversold territory. and then you get this nice bottom here as well. So it's not just looking at the moving average breadth reading, so the 20-day and the 50-day. You want to be aware from a kind of tape reading, a supply and demand perspective, what are you seeing the indexes do? Are you starting to see a bullish change of character, such as the August 5th low? Are you seeing it in a lot of stocks as well? Are you suddenly starting to see the Nvidias, the PLTRs, the Metas, whatever the leaders may be at that moment in time, acting a lot better? So I find this a really, really useful overview, okay, to think about when is that market tied in, when is that market tied out from a breadth perspective. And I think about the 20-day and the 50-day as a tide. Now the 20-day tide is going to be a shorter tide than the 50-day. Okay, the 50-day you get less readings in terms of overbought and oversold. It takes longer because the 50-day is often further away from the price action compared to the 20-day. So the 20-day you're going to get more oscillations. It's a bit more tactical. Okay, you're going to get more tide goes in, tide goes out, so on and so forth like this. You're going to get more readings with the 20-day compared to the 50-day. But when you're up here and you're in overbought territory, you're clear near overbought territory, and you start to get bearish breakdowns like this, you get some geopolitical news, the tariffs, the Fed, things like that, recession fears, and then you start to see that tide is flowing out. You start to see a bearish breakdown in the price action. I'm thinking, to use a Livermore terminology, that line of least resistance is heading downwards. It's heading out, and we're also seeing that confirmed with the breadth. But then what I'm looking for is that reversal. Now I'm expecting that reversal to come through more so when these moving average breadth readings are in oversold territory, like we're starting to see on a 20-day basis. 50 days getting pretty close as well. If we were to go change this up, let's put in IXIC, and then we're going to need NCTW, and we're going to need NCFI. So now what we're doing is we're looking at the NASDAQ comp. We're looking at the NASDAQ comp stocks above their 20-day. Remember, this is going to be percentages. This is going to be NCFI, which is the NASDAQ comp above their 50-day moving average. Again, percentages. So if we take a look here for the NASDAQ comp, what do we see? Well, 20-day oversold, 50-day oversold. Interesting. Note the prior oversold readings, okay, in here. And remember, market bottoms, they're ugly things. Okay, the news is going to be bad. You're going to be fearful. Okay, your account may have just been in a drawdown down here. But again, you want to train your emotions to pretty much do the opposite. When I start seeing the indexes have done this pretty much in a straight line, like this is a nice flush going on here. You get 20-day moving average breadth readings oversold, 50-day moving average breadth readings oversold. Okay, I know what the other side looks like. This is not my first rodeo. So this is a very useful also to help you mentally and your psychology to go, okay, 50-day moving average breadth readings into oversold territory, 20-day moving average breadth readings into oversold territory. You can go back and study this for yourself. Go and look what happens when you get market flushes, okay, like this, and then you get 20-day and 50-day moving average breadth readings going into oversold territory. Go and study it for yourself. That's the NASDAQ comp. If we were to put in SPX, and if we go S5TW, and if we go S5FI, this is going to be the readings for the S&P 500 20-day and 50-day basis, okay? So I know this is not my first rodeo, okay? Look at this here. Oversold readings on a 20-day basis, 50-day gets very, very close, okay? So this is what I like to see. These flushes, flush in the index, and we get close to oversold readings, okay? So you can look at it on the overbought side of things, okay? That market tide is in quite far, probably expecting a little bit of difficulty there, but then also waiting for then that market tide to flow out, things to start recovering, leading stocks acting a bit better, indexes to find their feet. Okay, we're there in terms of oversold readings, potentially on a 20-day and a 50-day basis. I like it when it's across the board. So you get the NASDAQ 100, the S&P 500, NASDAQ comp, 20-day, 50-day moving average breadth readings across the board for all of those. So all 6 readings are into oversold territory. Okay, really like that as a potential setup. I then also look for when everything is then overbought and that market tide is in. That's going to make me a little bit wary from a trade management perspective, and if I'm then targeting longs as well. So I find this really helpful as an overlay for the indexes and thus a lot of stocks because of the high correlation, because we're just in an algo driven market. So it really helps me from a trade management perspective to think, how do I want to be trading? How do I want to be seizing opportunities, using the trading tools, so the setups that I teach you here for free on YouTube. So I hope that video is helpful for you. I'll put a link to this layout in the comment section for you. So if you use TradingView, you can just go and copy this layout, and then you can start using it. Go and have a look through as well. Go and look at what happens when you get overbought readings for the 20-day and the 50-day basis. When you get oversold readings on a 20-day and a 50-day basis, I find it extremely, extremely valuable in my trading. So thank you very much for watching. Thank you very much for supporting the YouTube channel. And as always, I look forward to seeing you in a future video.